Ladies and gentlemen, in today's video I'm going to reveal to you what are the principles of wealth creation that have been used by the rich for hundreds of years. My name is A.Wilson. I've been invested in the financial and real estate market for the past decade. I've opened and managed my own fund and helped hundreds of new traders and investors to get involved in the investing world. Connect with me on Instagram and Thread on the name A.Wilson. And please do make sure that you follow the right account and the right verified blue check account, because there are many people that are faking my pictures. I will never ask you for money. Please do make sure that you follow the right verified account with the blue check. So there are principles of wealth that have been there for hundreds of years, even though that they are, new money being created like cryptocurrencies. These principles have been true since the beginning of money. And if you use them too and apply it with your understanding of money, you can become wealthy as well. First of all, we need to understand where money comes from. It all started 5,000 years ago. Before that, what economies and society were doing at that time was called bartering. So we were basically exchanging things for other things if the coincidence of wants was right. So what is the coincidence of wants? Imagine if you're an apple producer and your neighbor is an orange producer. Let's say you both wake up in the morning and your neighbor needs some apple and is willing to exchange the oranges that he produced for your apple, and at the exact same moment, you're willing to do the same with your apple because you want some oranges. Well, that's the coincidence of wants. But as economy grew and society grew, this became less and less likely to happen. Let's say you have another neighbor that sells corn, and this other neighbor wants your apple, but you're still in the need of oranges, and your other neighbor that produces oranges actually need corn that day. So what will happen? And that is why money was created at first. So you knew that with that medium of exchange, your friend that produces oranges but want corn can take that medium of exchange from you in exchange from his oranges, and he knows that for the same value you can buy some corn, and your other friend that produces corn knows that with the same amount of that medium of exchange, he can come back to you and buy your apple. So why am I telling you all this? Because we need to understand that money at first has been made and it will always be only a medium of exchange and not a storage of wealth. So the rich people have known that for hundreds of years. The simple fact that money is only a medium of exchange, and on top of that, it's controlled and owned by the government. So the government can basically do anything with money, including decreasing its value as they want. And that's what happened in the past 2 or 3 years. They printed an extreme amount of money, which costs the valuation of most currencies in the world. And this is why right now you can see all the cost of everything went up, and this is called inflation, because the currency had devalued, so you have the impression that everything else costs more. So because of these reasons, usually poor people think that they can store their value in money, and the rich people know money is only meant to be used as a medium of exchange. As soon as they've done the exchange that they want to do with it, then they take this value, they reinvest it in a real storage of wealth. Because the rich people invest their money not only because they want to make a return over their money, but the primary reason why the rich invest their money is to not hold their wealth into the currency that is owned by the government and can be devalued every year with inflation or with more money printing that is decided by the government. So investing is firstly an investment-proof instrument to protect your wealth and your freedom from currency devaluation. Afterward, you can have an investment appreciation goal to make a return over your money, which is good. But the first goal will always be to protect your wealth against inflation and against currency depreciation. So over time, I think it's riskier to keep your wealth into government-owned currencies that devalue every year than actually investing in real assets. So you should see investing as something that is actually less risky than keeping your wealth in a saving account that is basically kept in the currency that the government can devalue how they want. But now, let's talk about what is a real storage of wealth. The first and most common is probably gold. It has been there for thousands of years, and the reason why gold has been a storage of wealth, well, it's not only because of its look, but it's also because of the solidity of the metal and also because of its electric properties. So it has been there for thousands of years, and it will probably be there for the next thousands of years as well. So gold will always be a good storage of wealth. The other fact that is important to understand is that gold is quoted with the US dollar. So when you want to buy gold, you buy it at a price that is quoted with the current valuation of the US dollar, which means that every time that the US dollar is devaluating, gold will also appreciate because they have an indirect correlation. That's something to keep in mind when you're buying gold. Now, real estate is probably the second most greatest storage of wealth. You know, the first thing that real estate is good with is that it grows directly with growth population. So the more cities and society is actually growing in population, real estate will tend to appreciate as well because there is more demand. So the more demand there is, especially in large cities, the more appreciation you will tend to have. So I like real estate because of that, but also because, well, at the end of the day, that's a need that everyone will have, is to come back to a house and have a bed. And that's part of the three most important needs of human, which is food, clothing, and shelter. So real estate will always be a storage of wealth because of these reasons, but also because it is so much of a good asset that you can go to the bank, ask them to finance a good portion of it and take 100% of the risk while you're taking 100% of the appreciation by yourself. So I'll probably do maybe another video about real estate because there's so much other stuff to talk about, but that's one of my favorite assets. The third one is probably the fact of owning a piece of equity in a business, either owning a business or owning a small piece of equity, or simply owning stocks, whether it is in simple stocks or indexes or even mutual fund, everything that's around owning a piece of a business. And when the business is going to make more revenue, your piece of the business valuation is going to appreciate as well. That's owning a piece of equity. So that is something that can be a great storage of wealth as well, but you need to make sure that you have the right knowledge into what you're investing. On that note, if you ever consider starting your investing and trading journey, I offer a free call with me and my team. On my website, you can schedule the time you want that's available. Again, this is a free introduction call where I will be able to answer any types of questions you might have, and consider following my channel as well, as I have a lot more good content coming up. So I hope, ladies and gentlemen, that you enjoyed the video, and I'll see you guys in the next one.